Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Nick Hodge, author of The Daily Profit Cycle and publisher from Digest Publishing. Welcome to Wall Street Silver.
Oh, thanks for having me. It's my first time. I'm excited to be here.
Yeah, it's an
So,
absolute pleasure.
so, Nick, you write a lot about the metals, gold, silver, all commodities, really, lithium, uranium. But we're Wall Street Silver, so of course we got to ask you about silver, and I know you got some strong opinions about this. So we're below $20 an ounce right now. We're below $20 an ounce on silver, and it's not looking good. A lot of people are depressed on Wall Street Silver, on the Reddit community, on Twitter. People are, crying in their Cheerios. What's your thought? Is it gonna? Are we up from here? Down from here? What do you think?
Well, and rightly so. I mean, silver's been, and along with gold, disappointing given the inflationary environment we're in. And so, if I'm looking at the chart that you've got up there on a technical basis, it's failed to break out at $21 a few times in the softness that we've seen in the dollar and the bond yields in late September and early October. It tells me that silver doesn't really want to go higher yet. And if I look at a long-term chart, if you were to pull that all the way back to prior to just 2008, I think that's where we are. I think you get a crash, maybe not a crash, but I think you get a further deterioration down to $14 or $15. That's going to be the ultimate springboard for silver to go north of 21. But given the strength of the dollar, given the Fed's keen interest on raising rates, which I think is
Mhm.
going to continue for at least a couple of quarters, I think it's going to be a tough road to hoe for the precious metals. And then looking at silver as a non-precious metal, I think it's also tough as an industrial metal given the global economic contraction we're seeing. We've seen copper come down, and silver in an industrial respect is going to come down along with it.
Yeah, you don't think with solar is still growing strongly, and that's one of the big sources of consumer, or not consumer, but industrial demand for silver.
Mhm.
But even with all that, you still think overall the silver demand cycle might be trickling downward?
I think the economic cycle is bigger than the industrial supply and demand story, right? So if you have a global contraction of economic growth, slow GDP or contracting GDP in North America and in Europe,
Mhm.
I think that, wave or that cycle is bigger than the individual, supply demand cycle of individual metals. Yeah.
So Nick, what are some of the metals that are moving right now? What do you like right now? I mean, if not, our audience likes a lot of different commodities, not
Mhm.
just silver and gold. A lot of our people play in other commodities and mining stocks of those. Are there any specific commodities that are working at this time that you would take a look at?
Yeah, there's two that have been doing really well. Lithium is at all-time record highs. If you look at the lithium carbonate price in China, it's over $72,000 a pound. And one I really like and have been active in for years now is the uranium space.
Mhm.
I think that there's going to be increasing acceptance of nuclear. It's going to be increasingly accepted as a clean technology. You've really had some news on that front recently with a big company, a multi-billion-dollar company called Brookfield Renewables. I mean, it's got renewables right there in the name, partnering up with Cameco last week to buy Westinghouse for something like $7 or $8 billion. I mean,
Wow.
that's real money. We're talking about billions because they want to go upstream into the nuclear reactor technology because they think more reactors are going to get built. So uranium prices at the spot level have performed well this year, whereas many commodities and certainly the stock market is down for the year. Uranium has gone up there. At a year-to-date chart, it started at $30, $35 a pound, and it's up over $52 a pound now, and that still really doesn't cover the all-in costs of production for many producers around the globe. If you hear Rick Rule talk, or if you listen to any of the producers, when you include the cost of capital, that uranium price has to go to 65 or even $75 a pound to make sense. And in 2021, the world mined less uranium than it consumed. It makes up the difference on storage and things that are already in the supply chain.
Mhm.
But there's a supply demand picture that's shaping up really well in that countries that said they were going to abandon nuclear, including Germany and
Right.
Japan after Fukushima, are turning to it in a big way.
That brings up a good point. We've interviewed Rick Rule multiple times where he talked about for years what he was going to do with the Sprott Uranium Trust and start literally taking uranium off the market physically.
Mhm.
And he was telling everyone, the past couple of years, he was buying all these uranium miners back when uranium was,
Yeah.
at these ridiculous low prices in the 20s, and nobody wanted anything to do with these companies. He was buying them hand over fist when uranium was down here. So
Right.
now he owns, 50 or 60 of the best names in exploration and production. And sure enough, this is right here in 2021 when they started the Sprott Uranium Trust. Look what happened, and it sort of looks like it's breaking out again, doesn't it?
Hmm.
Yeah, like I say, it's got higher to go to cover the cost of production. And he wasn't just buying the companies, he was buying, physical pounds as well. And some individual companies did that as well. There's a company called UEC that was taking pounds off the market. And, what sort of happened was everyone was waiting for the utilities to come in and start contracting. And we were waiting and waiting and waiting. And people in the sector with capital to deploy, instead of focusing on, expanding their assets or buying new properties, they started
Hmm.
taking supply off the market themselves. And that was really one of the big sparks that led to the higher uranium prices that we've seen this year. I'd be remiss if I didn't say that some of the equities overshot earlier in the year, and you had really good performance in the ETF that you mentioned, and some of the individual equities that have pulled back now. And so while the uranium price is up for the year, as we just discussed, the
Hmm.
ETFs are actually down for the year. And I think that's a significant opportunity as we head into the end of 2022 and early 2023.
So, but what is really driving this sort of renaissance lately? I mean, you're hearing all sorts of countries in Europe, Germany, which is controlled by the radical left right now in Germany. The Green, sort of Communist Party is part of the coalition government in Germany, and even Germany now has decided to leave their nuclear power plants back on,
Right.
That's right.
and other countries are expanding nuclear. Sweden, the UK, they're all announcing new power plants.
Well, you hit the nail partially on the head there. You nailed one of the reasons. I mean, Germany, who said for years that they were going to abandon nuclear, says that now they need to keep their plants running to, meet this energy crunch that's resulted from, Russia cutting off the gas supply. So that headline you have up there was about a third plant they were going to keep online. A couple of weeks ago, it was, oh, we're going to keep 2 plants online. Now they're up to keeping 3 plants online. And as you say, that's a left-leaning green government. Even here in the United States, Gavin Newsom, the Democratic governor of California, has extended their last 2 nuclear plants in California, Diablo Canyon, because we've seen the rolling blackouts that California has been facing. They were telling people not to charge their electric cars a month or so ago, and now they've got to keep on their nuclear plants just to literally keep the lights on. So. And the same in Japan, where Fukushima actually did happen. The prime minister said in August that they're going to restart 17 reactors, and they're even going to build new ones. And what's interesting is that if you look at the polls, the younger generation in Japan is in support of nuclear power, despite that country's sordid history with both, nuclear bombs and nuclear disasters. 71% of the generation aged 18 to 30 say they want to build new ones. So the prime minister says not only are they going to turn on their existing reactors and extend their life, but they're going to build new ones. And the last thing I'd say to answer your question about why is, tax incentives here in the U.S. We just passed. Well, a couple of bills have passed. There was a major infrastructure bill, and then they passed the funnily named Inflation Reduction Act, which contained tax credits for not only producing nuclear energy, but building different types of advanced reactors, small modular reactors. And the U.S. has also said that it's going to establish a uranium reserve similar to the Strategic Petroleum Reserve.
Really?
So catalysts abound for uranium across the globe, and it's also being adopted by the quote unquote green movement or climate activists, because they simply can't meet their carbon reduction goals without increasing the amount of electricity that's produced with nuclear reactors because of the intermittency of the renewables.
About those bills that you just mentioned, the bills that have passed through Congress recently that are trying to incentivize, there's a lot of solar in there. And so that'll eventually help the silver market, I think. But for speaking to uranium, what are some ideas that people can have that you're talking to your investors about in the uranium space that they should be looking at right now?
Yeah, well, countries are increasingly worried about security of supply. They've seen that what Russia was able to do, and in the tax incentives that were passed, even for electric vehicles, they're saying that the minerals, the lithium, the cobalt, et cetera, has to come from at least friendly countries, if not, the U.S. Countries that we have trade agreements with, and there's only a couple of them. So, and I mentioned that uranium. The United States wanted to form a uranium reserve, and so I'm looking at ideas that are in the USA and in friendly countries. I know one company we both have an interest in, and that I'm a shareholder of, help finance while it was still private, is Kraken Energy. That's got an asset in Nevada that is one of the biggest past producing highest grade mines in the country. Had a really big heyday back in the 1950s, I believe it was, and they're starting to explore that and getting permits to potentially drill that here in the fourth quarter. One of the things that is important to note, I think, about Kraken is the team. So they have a crack team, pardon the pun. It's the guys from Next-Gen Energy, which discovered actually two of the biggest uranium deposits in recent memory. Garrett Ainsworth spent time with Alpha Minerals. He helped discover the Triple R deposit, which Fission is now advancing, and then of course the Arrow deposit, which NextGen has. And so there's a couple of guys from the next gen team that are helping push this forward. They have a relatively tight share structure, and they have cash in the bank, which is important in this environment because nobody seemingly wants to write checks right now. So Kraken Energy is one that I hold shares of, and I look to have a keen future here as this uranium bull market continues to develop.
Yeah, they're in Nevada, which is probably one of the best states for mining in the United States, and they've got two projects, Apex and Garfield, in Nevada. So yeah, it's worth taking a look at. Nibble away at it if you're going to invest on all of these things. They're all high risk, high reward. So just nibble away at it. Don't bet anything. Don't bet everything on any one play. Something I would always advise people of. Although
Absolutely.
I'm not a financial advisor. I'm just a clown on YouTube giving his opinions. I should just make that clear.
No, me either. I write about what I'm doing with my own capital. And, I was saying earlier that the uranium equities are down despite uranium being up. Kraken ran to over $1 earlier this year, and it's pulled back to 48 cents. I would expect that some of those people who came in and bought at $1 are going to be tax loss selling this thing here over the next couple of months. And that presents a great opportunity. I've pulled up the chart a couple of times in recent days trying to find my entry level, and it seems like in the 40 cents, certainly if it dips into a 30-cent handle, it's about the lowest it's going to go given the technicals and the levels at which they sold shares previously. So I think it could really run as the bull market continues in uranium, like I say.
At the same time, we are Wall Street Silver, so we got to care about the silver funds here. So are there any good silver stuff that's, all of these are high risk, but we also need to have proportionally high potential rewards for these. Are there any specific names out there that you like right now that have pulled back a lot, but there's still high quality ones that you'd pick up on a discount right now?
Yeah, one that's pulled back a lot that again I'm a shareholder of, so I'm biased. Is Silver Hammer. They have a couple of assets. One is a past producer in Idaho, which is just down the street from me. It's the Silver Strand mine. They completed some geophysics. There you go, the IP, induced polarization survey there back in the summer, and they completed their first hole. I think they're drilling 1,500 or 3,000 meters, and we should be getting some assays from that one soon. And they also have two assets in Nevada, which we just said was one of the best places to go mining in the country, if not the world. So that one's pulled back. It's down around 30 cents Canadian, if memory serves, and was much higher than that earlier in the year. And so, if silver can get some legs under it, like I said earlier, I expected silver to get a little bit softer, but certainly this would do better in a better silver environment. And on the back of good results, look, they had some drill results last year that were high grade, and not just silver high grade. They were intersecting some 5 grams per ton of gold over a couple of meters. So again, shareholder, and I'm biased, and Silver Hammer is one to take a look at. Another one that hasn't pulled back, if you want two names, is Dolly Varden. That one has actually gone up almost 90% in the past month or two. It was down around 35 cents, which was a 52-week low, and then now it's up closer to 65 or 68 cents. Sean Kunkun has done a really good job running that company. He's consolidated what's essentially a district there, putting together Homestake Ridge with the Dolly Varden deposit. They've got something like 65 million ounces of silver in a resource already, and over or close to 1 million ounces of gold. And whereas the company we just talked about, Silver Hammer, is drilling 1,000 meters or so. This company just completed 30,000 meters of drilling, and we've only started to get results in the past month or so. So this is going to be a news-rich company throughout the rest of October, November, December, and into January as the assays for all those 30,000 meters of drilling start to come out. And then importantly, because I'm a structure guy, is there's 9 people that own some 80 or 85% of the shares of that company. So it does have I think 250 some million shares outstanding, but they're controlled by 8 or 9 entities. And so that's a really well-run silver company with a real asset that is one to take a look at for sure.
Yeah, Eric Sprott owns a big chunk of this one. A lot of big names own Dolly Varden. It's definitely high quality, high grade, and bulk size potential on this one, which is those are all the things you want to see for something that's probably eventually going to become a mine.
And polymetallic too. I mentioned the gold and the silver, but that headline you have up there, look, has 4.2% lead and 1.4% zinc as well. So not just a one-trick pony.
So Nick, we're coming up on the end of the year. A lot of stocks are down at this point. So you're expecting a lot of tax loss selling. So how would people, if you've got spare cash, what would you be watching for right now? And how would you take advantage of the situation?
Yeah, you've got a double whammy, I think, coming. You've got tax loss selling, given that some of these resource names are down for the year, and you've got interest rates that continue to go up. The 10-year bond rate was up over 4.2% the last time I looked at it. That's going to keep a lid on this resource sector for the foreseeable future. And so if you've got spare cash, like you say, and you can pick up some of these babies that people are throwing out with the tax loss bathwater here at the end of the year, right, that's truly a contrarian way to move. I've been making my list. I told my premium readers this week that, I've been making a list, and like Santa Claus, I'll be checking it twice, certainly heading into December.
So the link to if you have a free website, a free newsletter, the link will be in the description if anyone wants to go subscribe. Nick's an expert in this stuff. He's been writing about it for years, and probably well worth giving, at least signing up for his free newsletter and dipping your fingers in to see what Nick's all about. And then he has a premium one, of course, on top of that he also sells. But, Nick Hodge, we're definitely going to have you back on in the next few months. Thanks for joining us.
I appreciate it, guys. Thank you.
Thank you.